Hey, this is Mike Swanson of Wall Street Window. I'm going to do a quick update on the stock market. Of course, yesterday the markets are all down pretty good. The news associated with the drop on that day was about China, all these riots taking place because of all the lockdowns, the really intense situation over there. But as I talked about in the video I did Sunday, I was sort of thinking we'd see a little bit of a dip in the stock market this week. I'm not so sure if that news is really the cause of the drop or simply the market dropped. And that was the news that, people saw and talked about. So then the media used that to explain it. Why did I think the market was going to dip a little or could this week? Well, look at the chart. We had a strong rally in the S&P 500 from the October low. And at some point, it's going to pause. And we're right on the 200-day moving average, which is the green line on this chart. The market could not close above that level in August. It only got above that level for about a week in March before going lower then. So it's a serious resistance point. But also, it should be noted that historically, the S&P 500, the Nasdaq, and the Dow tend to go up during the Thanksgiving holiday abbreviated week and then pull back this week. It's a historically consistent. Those 2 weeks are the most consistent to go up and down than any other in the year. Now, what I'm really watching, though, and most interested in isn't the S&P 500, it isn't the Nasdaq, it isn't the Dow. It's what is going on in the price of gold. Look on the bottom of this chart, and you can see a flat line SPX ratio SPX. It's dividing the price of SPX by SPX and coming up with one that never moves. It doesn't mean anything, but let me show you where it does mean something. This is GLD. This is the gold ETF. Now, while the S&P is down about 0.5% today, this is up 1%. And when you look at the ratio, now you can see it come to life. So we're looking at the price of gold divided by the price of the S&P 500. What that creates is a ratio plot. It's comparing the price action of GLD by SPX. When this goes up, it means that the price of GLD is outperforming the S&P 500. If it goes down, it means it's underperforming. A chart where it's been going down all year is ARK ETF. And here's why this is important. Things that underperform the stock market tend to fall more than the stock market does when the market has corrections or declines, and then fails to rally enough to make up for those losses. It's a laggard. It acts as a millstone in someone's portfolio. So if you want to beat the market, what you want to do is be in those situations that are beating the market. Gold is doing that. The price of gold is beating the stock market. And it's been doing that all year, and it's continuing to do that, even though gold had a significant pullback starting in March. When you look at, here's the real price, it went up to 2075 approximately, and then fell all the way down to 1625, popped back up in November. And you can see, even though gold is pulled back, its relative strength ratio is still done great compared to the S&P 500. It's because the S&P 500 has been pulling back more than gold when it pulls back. And so gold's one of these leading things. Now, what I'm really curious about is if we're going to see gold breakout. Can gold go through the high of November in the coming weeks? Because we have the setup where the outlook is getting more positive for gold on a fundamental basis. In December, the Federal Reserve is set to raise rates by 50 points instead of 75. It's reducing the pace of its rate hikes, and that's something that could weigh as a negative on the U.S. dollar, because central banks around the world are in a position to raise faster from this point than the Fed is in regards to the size of its rate hikes. So when we look at the US dollar index, which is important because it tends to trade opposite the price of gold, it has had a pretty significant pullback over the past 5 weeks. Now it's been trying to put in a bottom, but if you notice, it broke the blue line, which had been acting as support. The 50-day moving average came down to 28.5. This is up, an ETF that tracks the US dollar index. Now, if this ETF makes a new low, if this low fails to hold and turns into the start of a new downtrend, which I think is very likely, that will be a positive catalyst that will drive more money into gold and into some of the mining stocks. And if you look, one thing that benefits from a falling dollar is other markets around the world, or some, that you can invest in outside the United States, because you get the currency benefit along with if their stock market goes up. So one market that I bought around $22, now it's 25. This is EWG, an ETF that tracks Germany. You can see it's come alive. It's been outperforming the stock market since October, and it's up today while the S&P is down. So it's continuing to do that. I think this ETF, if the dollar index goes down, will break out along with the price of gold and do well in the coming months. This has been an interesting morning, a day in the markets. Not too concerned about the fact that it's down today, the S&P, but I had some surprising moves in some stocks that I own. I'll just show you one. SCCO, Southern Copper Corporation. It's up 3% today. I bought it a couple weeks ago before it gapped above 50. And you can see the relative strength for this has been outperforming since August. Another one which had an interesting gap up today and has already cleared that short-term resistance. Relative strength is actually almost at a new 52-week high. That's the bottom indicator on the chart. Is BHP Group Limited, one of the largest commodity industrial companies in the world. So while we are seeing the continuation of what's going on in China, it's not impacting these commodity materials stocks. The materials sector as a whole is here's a chart that tracks it, XLB. So again, I consider a decline, if we get one, the US dollar index would represent a golden pivot that would set the stage for a continuation of gold going up. That might not happen tomorrow, but we're approaching that Federal Reserve meeting in December, so it's going to be real interesting to see how all the markets react to that meeting. And I'm still watching things going into it. What's the bond market going to do? There's all things we got to keep our eyes on. So I just want to show you what I was looking at the moment. Now, if this is the first time you see me on YouTube, get my next video update, hit the subscribe button and hit the bell next to it, and hit like so that I know that you're out there.